Jerry?
Well, I've just been reading a book about the futility of forecasting, actually, as far as being precise is concerned. But I do think that this time round, this global crisis is very different from the one in '98. In '98, for example, the North-South Expressway saw a 7 or 8% fall in traffic volumes. This year we had a 6.2% fall in GDP in the first quarter, down 3.9% in the second quarter. But traffic on the North-South Expressway is up 4.5–5%. So I don't think the domestic economy has been that badly hit. So I think that earnings momentum, I think they call it, or the consensus views are likely to be revised up, which is usually good for share prices.
Okay, excellent. Let's jump quickly to the US. I'd like to ask your expectations for the Dow.
For me, I'm not an expert, but I think that on the charts that we're looking at, I think the Dow probably has a little bit of upside left, but is looking a little bit tired, and I think we could see quite a strong correction on the Dow, not too far off.
Okay, Jerry.
Yeah, as I said earlier, I think it's lagged the Asian markets by a significant amount, but that's for a reason. The real cause of the credit crisis is from the developed world, and it started in subprime mortgages and their derivatives in the US. So valuations, I was reading the other day, operating price earnings ratios are now at 19 times, which is the highest since 2004 for the US market. So I don't think there's that much upside. What the problem is, I think, is that everybody's now thinking that the crisis is over and we've come out of this free fall. But I don't see the consumer bringing the economy back to growth again. They've run out of money, and there's a very long and slow recovery from here on in, and that's going to affect the stock market, I think.
But do you think that Asian markets are likely to see recovery before the US?
Markets or economies? I think
Markets.
Economies, definitely. Stock markets, there's that big debate about whether we've decoupled or not. I think there's still a lot of money around, and the central banks of the world are making pretty sure that there will be a whole lot of money continuing to be around. But liquidity tends to have a mind of its own and find the best place, although the world might want it to go to the developed world to help support the banks and encourage borrowing. In reality, it'll find its way to places like Asia and other emerging markets where there's asset values that have a big upside.
Andrew, you seem to agree.
Yeah, I think if you as investors find that perhaps the developed economies and the developed economy companies disappoint in terms of growth, you will see more investments shifting from the developed markets on into Asian markets, and that's why I think that even now there is an expectation that it has to be the Asian economies and the Asian consumer that is more likely to pull us out of where we are today than the Western consumer.
Okay, now let's touch on the economy so that Suhaimi will have something to say as well. Now, your opinion on how the stimulus package in the US has fared so far. Do you think it's working?
I think if you look at the quarterly GDP numbers coming up from the US, there is an indication in a way that the stimulus package is working, in the sense that the numbers are improving. The quarter-over-quarter declines in GDP is narrowing. And in fact, much of that improvement in the quarter-over-quarter GDP numbers for US actually is attributed to the impact of the stimulus package, in the sense that the government direct spending is going up, and there also been an improvement in consumer spending. And I think that to some extent reflect the fact that they are benefiting from all these tax rebates and checks being sent by the US government to the people, and they are spending part of it. So I think we do see indications that fiscal stimulus in the US is working, and it's a huge package. I mean, we are talking about something that is about 5% of US GDP. Surely one expect there to be an impact.
Andrew, Jerry, do you have anything to add to that?
I think all the money they've thrown at the US economy is bound to avert complete Armageddon, and that's what the market is celebrating at the moment. That you know, a year ago, 18 months ago, we were worried that the whole banking system as we know it would break down, And that hasn't happened. And if you look at the private sector interbank rate against the federal set interbank rate, the gap's got narrower and narrower and narrower. People are more confident that the governments can, in America and the Western world, can sort things out. But I don't think there's a huge pickup in consumer demand, and it's American consumer demand that drove the world's economy for a long time. And they're all spent out. They're starting to save, strangely.
Closer to home, Malaysia's own stimulus package, has it worked, and do you think that there's any further need for more stimulus for the economy?
I think our stimulus package so far is somewhat slow in terms of implementation from the way we see it. If you look back at the first and second stimulus package, the allocation dedicated for government spending itself total about 22 billion. Of course, 7 billion in the first package, another 15 billion in the second package, which total 60 billion overall. From what we saw, at least up to the end of the second quarter, not even 20% of that has actually been spent. But I think at the same time, we are seeing indications that there are more and more projects being awarded. There's a lot of tenders out there. Construction companies are certainly bidding, and that means there must be a lot of tenders out there for them to look at. So in terms of implementation, there seems to be some pickup towards the end of last quarter, and I'm sure that momentum will continue for the rest of the year and going into next year. As to whether we need another package, I think it all hinges on the assessment of whether or not this stabilization in global economy that we are seeing is going to be sustained, and there will be further improvement in external conditions such that they won't, then I think the government will decide whether or not we need third stimulus package. But indication so far from the government doesn't look that we are going to announce another stimulus package. In fact, one also must not forget, we still have the remaining money available or yet to be utilized under the 9 Malaysia plan. Because I think from 2006 up to what you call second quarter of this year, out of the 230 billion allocation for development spending under the 9 Malaysia plan, I think only about 2/3 were spent. So there's another 1/3. That in itself can be a bit of a stimulus for the economy until the end of next year.
Andrew, Jerry, do you agree with that opinion?
Yes, I think if the government does decide to accelerate the pace of these 9th Malaysia Plan projects, I think that will be a very important source of spending. The whole issue is that whether they can find the funding for it. But beyond the stimulus package, I think one of the reasons why the economy hasn't done as badly is simply that if you look at the consumer, consumption spending hasn't really collapsed in the same way it did 10 years ago in the Asian crisis. And the consumer hasn't been as badly hit. Because this crisis, Asia was not the epicenter of this crisis. And if you look at from around the 3rd, 4th quarter of this year, actually household budgets have actually benefited slightly, not huge amount, but have benefited slightly from the fact that petrol prices have come off in the last 3 quarters or so since the beginning of the global financial crisis. And also interest rates have come off, which means that mortgage rates for households, mortgage repayments can be cheaper. And so that may have held up and have helped household budgets overall. So that's part of the reason why the consumer has held up.
Jerry, I expect you'd concur.
Yes, I just think that people talk in such huge quantities at the moment. Somebody sent me an email the other day that looked at $1, $1,000, $1 million, and then $1 trillion. And the $1 trillion is about the size of a football pitch. People talk about these numbers at the moment. I don't think it's about the quantity. It's about whether it's directed right. I think the administration here have got to get this right, because we're running quite a significant deficit for the, 12th year in a row, but it's not getting any better. The money is harder to come by. Therefore, I hope they're more targeted in what they spend it on. Education, infrastructure, as long as it doesn't get sort of grafted away. That's the key factor.